Now then, it's a pleasure to welcome back to Global Sciences R.E. McMaster Jr. of Texas and Montana. Those are his two places of habitation. He is a nationally known and nationally recognized financial consultant, and his paper, his newsletter, The Reaper, goes to 80 countries or whatever. He'll tell you how many it is right now, but it is all over the world. He's in touch all over the world all the time. And he's been with us before. Some of you have heard him, some of you haven't, but you will now, and it's a pleasure to welcome R.E. McMaster. Bring him on with a nice, warm Global Sciences. Welcome, please.
Mic test. Can you hear me okay? In the back? Am I coming through? Yes? Nod? Awake? Lunch? Okay, good.
So far?
All right, here we go. Okay, I've got a series of transparencies I'm going to cover this afternoon as part of my main talk, and elaborate from there and open it up for questions after that. By way of preliminaries, back on table 55 back here, there's a complimentary, that means a free copy of my newsletter, The Reaper. I urge you to pick one up. There's also a couple of copies of an international newsletter from the firm of Mark Harris. I brought those with me because that company out of Panama has been involved in things having to do with protecting Americans from such things as seizures, involved in people who are subject to excessive lawsuits, and also who are interested in international investing. One other thing that's in the newsletter back there you'll find interesting is an insert on earth manna. It's the only one of 3 health food products I've handled for about, I guess 5 or 6 years now. And I want to tell you a couple things about this because the proof's in the pudding. This is the bottle right here. I turned 50 this year, and I've been able to do some biological tests, and my oldest body system is 37. Parasympathetic side of my autonomic nervous system is 37 years old. And I really think it's largely due to this product, which saved my son's life, who was an uncontrollable epileptic for like 14 years. Recently, literally within the last month, I was in the Dominican Republic, where there's a cancer center using electromagnetic healing for treating cancer, $20,000 flat fee, 100% money-back guarantee unless there's complete remission. They understand that cancer can only live in an acidic, deoxygenized environment, and they run you through the electromagnetic field, polarize the cells, and then use their revised ionization scanner to check where the ionization or where the abnormal cells are in your body. They warned me before they ran me through, because I'm looking at setting up one of these centers in the Bahamas. They warned me before they ran me through that the machine always goes off. Like that. That's what it sounds like. Thank you, thank you. So anyway, the machine always goes off when they run you through, because everyone has abnormal cells in their body from either congestion or limp or gamma rays or something. Long story short, I'm the only man they've ever run through at age 50 that's ever run through ever, and I'm almost 50, that's never had no readings. The machine did not go off, no abnormal cell readings. I wouldn't have thought this was significant, except they've run thousands of people through. There's only been one woman who was considerably younger than me, 20 years younger, that they ran through also, but 2 people. But this is consistent with some live blood samples that were taken of me about a year ago and put under a live microscope. And the guy that did it said, I don't understand. He said, do you eat nothing but totally live food, and are you a marathon runner? And I said, no. And there's now a doctor in Sedona that's using this product because he has a live microscope also, and he sees what it does in terms of being to the human body what good soil is to plants, and he has all of his patients on it before he puts them on any other program. So I just share that with you because I'm at a lot of tears and money and effort in getting this in terms of saving my son's life, and sometimes you have to pay the price before you're able to share life with people, and this is one of those cases. The insert's, again, in the newsletter. The other thing that I brought with me that's rather unique, this is my 10th book. It's called The Christ Within. It took me 17 years to write it. It's got 61 chapters and 465 pages, and the subtitle is The Church and New Age Seek Him.
Fire alarm.
Well, there was an ice storm in Texas. The plane was late getting here. I got here about 1 o'clock this morning. My boxes did, well, anyway. It's one of those days. Anyway, about this book. One of the master formulas I work on when I go into any culture is that government is always religion applied to economics in every culture. If you know any one of the three, the government, religion, or economics of the people, you can triangulate to the other two, because all governments basically sit in the middle of between religion and economics, and all laws are nothing more than legislated ideas about right and wrong, good and evil, morality and ethics that are taken from the religious realm that in turn frame the arena of economics that the great Austrian economist Ludwig von Mises called human action. And so I find it's interesting in this culture in terms of, I'm sure many of you have been frustrated with the, quote, religious Christian community, which is claims to be 88% of our population, given where we stand economically and politically, if government is religion applied to economics. So this book was really written as a bridge for that. I only brought 28 of them with me. They're also back at that table. Normally they sell for $20. For a group like this that's on the cutting edge, you know, I'm selling them at cost, or $10. I just want to get them out so you can have something to share with people that I know most of you have friends and relatives from talking with you that you're trying to stretch and pull and you need something to help. So that's what that's here for. And by the way, in case you don't, they run out of books or the Earth Manna inserts, let me give you an 800 number where you can get in touch for either the Earth Manna or the Christ Within. 800-528-0559. 800-528-0559. Okay, now to the heart of my presentation. This is going to be an unusual year. This is going to be a real unusual year. Where the Earth's crust is thinnest is at Iceland. So when that volcano blew up 5 to 6 miles high, through in some places that glacier is like 1,800 foot thick, it signaled a real change in what's going on, an acceleration with what's happening in the Earth. And these things I've correlated with markets going back to 1790. And it's also a year when things are going to start coming to light. Not only collectively in society, and it'll probably be a day of real Bill Clinton's, year of Bill Clinton's reckoning, maybe Hillary too, but also at an individual level. So if you've got some problem you've been dealing with in your life or something that you've been struggling with, it's a year to get it together before it does you in, because literally we're at the trough of the sunspot cycle. In the first quarter of 1997, the sunspot starts to increase, but the nature of the increase is like the Murata minimum, which means we're moving into a time that's akin to a little ice age, like existed in 1612, 1615, in that time. And this is a time historically in climatological history when climates become more harsh, variable. The Earth is losing its magnetic field charge at a rate now that we haven't seen since Jesus Christ was on the face of the Earth. So we're looking at all this time of change when Newtonian physics, or what we call physical reality or nature, is in this twilight zone. There's a tremendous amount of crossover with what we call quantum, Einsteinian, supernatural interaction. And that's this integration time period as we go through this shift that carries between now and 2008, maybe 2012, in terms of an accelerated fashion. So what that means on an individual basis is that you will find people that aren't grounded, that are upset, that are hitting the roof, that are seeing red, as opposed to being settled down, keeping their energy low. You know, all healers heal at the resonant frequency of the Earth, the Schumann resonant frequency, around 7.83 hertz on average. So it's a time to stay grounded this year, keep your energy low, don't attach to other people's stuff. It's not a time to be a victim. It's time to be responsible. It's time to probably do less and focus on what's important in your life and stay clear about that, because what you're going to find is the society at large is going to be like someone that's headed toward a nervous breakdown, both individually and collectively. Things moving faster and faster. Have you noticed in your life how things are speeding up? Things are going faster and faster and faster and faster and accelerating. And basically people that are ungrounded aren't going to be in control of that. So if this would be a year, and by the way, I want to show you a couple of other charts while we're at it, in terms of the acceleration of earthquake and volcanic activities that have been occurring since around the 1950s for the most part. The average number of earthquakes per decade of Richter magnitude 8 or higher in the U.S. and the world, you can see around the 1950s they started moving up in terms of the world, even in the U.S., and the average number of tornadoes is also on the rise as well. This is time when mankind moves from the forced collective, such as government, socialism, communism, fascism from the top down, which is the forced collective, unity being feminine, forced unity, forced yin, back toward the individual end of the spectrum, where there's individual responsibility. I don't care if you're man or male or female. We're talking about the individual end of the spectrum, which is masculine in nature, that leads to individual responsibility, accountability, and people, again, being required to be moral in terms of honoring their covenants and their contracts. So we're seeing a topping out, so to speak, and the kind of a last hurrah effort for a new world order at a time when the emerging earth trend is clearly toward decentralization. So this leads to tremendous upsets politically, economically. You get a lot of mutations in terms of viruses and bacteria when the frequencies of the earth change. Another reason why the earth man is important in terms of what we've seen under live microscope with it. So this is a time that basically it's important to be in balance, to stay settled down. It's not a time to live in your head. Keeps your energy up high. I mean, you think linearly, that's masculine in your head, cause and effect, A equal B, B equals C, A equals C, because you won't be able to figure it all out. You can't live totally in the masculine end anymore. It's also not a time to live totally in your heart, because the feminine magnetoelectric matrix, without the structure of the head, basically leads to emotional chaos at a time when things are becoming ungrounded anyway. What it is a time to do is live equitably from the head through the heart, living the head through the heart, so you have the structure for living basically spiritually. The law and love, so to speak. With regard to stock market cycles, I expect this to be a year of surprises. The nation should get a wake-up call this year. It's a time when people, they're going to have to deal with reality. You're not really conscious unless you're living in the present, in the now. Because this is the only time that life really exists, right this very nanosecond. I mean, if you're living in the past, basically, you've lost your energy to the past. The same thing if you're living in the future. You're unconscious. And you listen to people using such words as I regret, I'm angry about, I'm bitter about. They're living where? In the past. They're saying I'm worried, I'm anxious, I'm fearful. They're living future. They're not alive. They're conscious. And this is going to be a time where people have to be conscious. And people that are unconscious, because the nature of things accelerating will require you to focus on what's going on here and now, will lead to people either getting down and dealing with their issues and dealing with the important things in life, or there'll be a lot of self-destruction. That's why it's important not to take on other people's stuff this year and deal with what you have to deal with yourself and deal with less. This inevitably comes down to money, because money, there are two golden rules. Whoever has a goal makes the rules is the rule of money. That's the seen reality of the world in which we live, in the natural. Of course, there's the other golden rule, do unto others you'd have them do unto you. So there's a spiritual as well as a natural golden rule. And frankly, you need both, because money does run this world. I do expect this will be the year, particularly the second half of this year, when there will be some startling events start to occur. And for those of you who are following what is now clearly one of the greatest manias in history, in terms of the stock market bubble, 12 of the 14 major cycles affecting the stock market have topped out. Most of the turning point work that I do and that I follow and respect points to between now and March 8, maybe as late as into first quarter, for the market to basically enter some type of correction. I'll show you some graphs on that in a few minutes. We already have Japan, which has lowered its interest rates to 0.5%. Who has depreciated its currency significantly. In fact, oil in terms of yen is now up 78% in price. Who are facing a declining stock market and basically a deflation. Europe is also moving into a recession that's deflationary. The U.S. has had a different phase in the business cycle and is now in what would call the latter stages of the inflationary phase, but I would expect that to probably top out by no later than the end of first or second quarter this year. There could be earth change surprises, it could be political surprises, there could be just economic realities of expansion and contraction, because our economy is based upon the fictitious expansion of credit through the banking system that leads to the economic recovery and boom, and the contraction in the use of credit that leads to the recession. We have more debt now than we've had in U.S. history. The average American household has less than $2,000 in savings. Less than 4% of Americans are financially self-sufficient at age 65. Contrary opinion says when you're at the extreme of a mania, what you want to do is go the other way. One of the root meanings of the word debt is death, D-E-A-T-H. Mortgage, mort comes from the French word as in mortuary. So I would think it's a time to, if you have some nice profits, you have some opportunities to reduce debt, to increase income. This is a time to consider doing that sincerely with your money. Also, it's a time, I think, to basically be less material. You know, less is going to be better. To simplify the life. With the earth changes that are coming, if you're able to eat food that's grown in your own local area, where the longitude and latitude are similar to where you're living, that could be increasingly important. Because polarization is going to be an issue. Whether it's polarization between men and women, understanding who they are as men, as being different from women, equitable, not equal. Polarization at the cellular level in terms of sodium and potassium balances, but polarization is going to be key to really doing well in this next year. And I tell all the people that I've worked with, and its clients as well as in the newsletter, you're not wealthy unless you're healthy. You take an active trader in these markets, if his health declines as much as 10%, that's enough to move him to a break even to a loss. So it's going to be a real challenge for balance to come into our life holistically this year, spiritually, mentally, emotionally, and physically, if we're to be able to prosper in all of those areas. It's not going to be one or the other anymore. It's going to be all of the above integrated in harmony. Now, I know from listening to some of the speakers this morning, and pieces of what they said very much dovetails with these opening remarks. What I think will do well in terms of grounded investments over the next few years are black gold, which is the energy complex, and stocks that are involved in the energy complex following corrections. Most of those are overbought right now. Protein gold, which is food, will do well. The reasons for those two fundamentally have to do with not only increasing demand and low supplies, but also the fact that radical Islam controls potentially controls 5 of the 7 key shipping choke points of the world. And Iran is literally arming the Straits of Hormuz, necessary to, to cut off all the oil coming out of that Gulf, which would be significant in terms of world oil prices. Not only would that lead to economic chaos and contraction, but also lead to higher energy prices. So there's an old saying, you profit when there's blood in the streets, so to speak, and oil and energy investments should do well. They've been doing well for the last year. I had some clients that bought crude oil call options February of last year, sold them in December. Some of them made 10, some of them made 20 times their money in a year. I expect to see some spike in oil prices. In terms of protein gold, we still expect to have more increasingly unsettled weather during this time of increasing tornadoes, earthquakes, earth changes, sunspot cycle changes, and so food prices should go up. In terms of money, I expect it to be a very, very difficult year, particularly the second half of the year, in terms of being able to holding on to money, keeping it, investing it wisely, and maintaining it. That's why one of the most important things you can do is reduce your debt level, because anytime you're in debt, you're assuming you're able to predict the future accurately and correctly and prosper from it. And I think we'll see more chaotic involvement in the world financial arena over the next few years. And that'll make it more difficult to predict the future accurately. And so it's a time to be more cautious and retrench and be as much as out of debt as possible. For those of you that have done well in the stock market and are in mutual funds, one of the things that is important to recognize is the most important principle that you can apply is the principle of money management. Money management. I consider money management more important than either being lucky or good. And by that I mean if you've got significant profits and the markets run up, then basically from the high you compute a 5 to 10% decline in price and say if the Dow breaks 6,000 I'm going to be out of the market, or the Dow breaks 5,500 I'm going to be out of the market. But come up with some solution where basically you preserve capital. That's going to be a key. Preserving capital and finding ways also with your own skills, preferably close to home, to accumulate it. There are now more mutual funds than there are stocks listed on the New York Stock Exchange. every couple of weeks in my newsletter, I have what I call a long-term investor's portfolio, where I talk about where I think the best place to be is in money. And I'll go anywhere from, right now I'm in US dollars because the US dollars has been on quite a rally. But even this last year, even though the US dollar was strong, the New Zealand dollar, Malaysian ringgit, British pound were stronger. And so you can now have the ability to open up a bank account with a foreign bank that has a branch office in New York, Chicago, LA, wherever, and you can call them just like you call your broker and have a CD in a foreign currency. Because all of you are currency speculators. You know that? Every one of you is a currency speculator, because every one of you holds US dollars. And it's always variable. This last year, agricultural stocks, energy stocks, gold stocks, natural resource stocks were the place to be. Those I think will be generally the trend toward grounded investments will continue in that arena in this next year. But right now, the pullbacks are not in the market, and so entry point's important. Being in cash, I think, is a good place to be. I think there'll be a place to be in bonds later on this year, but it's not now. This comes from a friend of mine that does excellent analysis, Ned Davis Research. This is a combination of all his cyclical work, and his projection is by late July would be the latest time when he expects to see a stock market top. So I mentioned earlier that my work indicated the last half of the year would be more significant and more difficult than the first half of the year, and most of the work that I am seeing is projecting significant turning points in stocks, bonds, dollars, and just markets generally between now and March 8th. There's a solar eclipse March 8th, if memory serves me correctly. It's a time to watch as well. Okay. The bottom chart here is the mutual fund index from Investors Business Daily. And it's not well recognized that the mutual fund index made its high in May of 1996. It has not made a higher high since then. So mutual funds effectively topped out nearly a year ago. So there's signs of weakness in a mania where if you're going to be in key stocks now, it's time to watch it real closely, move a protective stop loss up, or what I mean by stop loss is set a point not too far below the market where if prices drop, you get out and preserve your earnings, because we're in the time frame when there could very well be a shift. And you expect this kind of shift to happen when you see the likes of new net cash inflow into stock mutual funds and billions of dollars has soared in the last four to 5 years. More than 88% of all money ever in mutual funds has come in the last few years. And also net equity inflow as a percentage of GDP, as you can see, from 1987 to the present has just skyrocketed. Well, no tree grows to the sky, so to speak. And it's my thinking that probably as much as a 10% correction in the stock market will lead to a change in psychology. It said, well, what's holding up the stock market now? I think it's politically correct, so public consensus is holding it up. The tremendous flow of funds coming out of IRA and retirement accounts, pension plans, are moving into stocks. Thirdly, derivatives. There's 17 to 19 trillion dollars worth of debt in this country, and worldwide there's about $40 trillion of derivatives. Those are like options and commodity futures options and things of that nature. That is a very manipulative way of causing changes over the short term. But there's some problems that exist presently. One, wage pressures are increasing. That if wages are raised by corporations, that will reduce corporate profits. Two, we've seen a decline in corporate earnings as a result of the one-time windfall in earnings that was made available by lower interest rates. Thirdly, we're seeing higher inflationary pressures coming from higher oil prices. And fourthly, the Japanese in particular, in an effort to keep their economy from imploding, have been buying record amounts of U.S. Treasury debt and U.S. dollars in order to send the dollar higher and the Japanese yen lower. Well, that's a short-term fix. We're doing what Argentina did. At one time, there was a phrase in Argentina called "rich as an Argentine." Argentina had the 6th highest standard of living of the world. It did it by having a current account deficit that it financed from abroad. That's what we're doing. They dropped to 60th quickly. What you mean by that is when we're selling our debt internationally, when we're selling U.S. Treasury debt internationally to these foreign central banks, and our current account deficit, which means we're importing more than we're exporting, is being financed internationally, basically our fate and our economic welfare is in someone else's hands. So when that shifts for some reason, inexplicably, you never know, comes back the other way, then all of a sudden you run the risk of higher inflation, higher interest rates, and an implosion in the economy. The Japanese finance ministry has said they do not want the yen falling any further. They've said that clearly twice or 3 times in the past month. Now, all this is occurring, again, in this first quarter time frame when these cycles are coming. So I think it's very propitious and appropriate that this talk, I'm able to give this talk to you today because we are in literally this cluster of time frame in first quarter and even in the second quarter when we could start to see some significant changes in our financial environment. Time-wise. Just some other indications of household direct and indirect holdings of equity mutual funds. Equity mutual funds as a percentage of total financial assets is at record levels. Households' indirect holdings of equities as a percentage of the respective total financial assets, again, have moved up toward the vertical. And anytime you see a market or any type of line having to do with finance moving up toward the vertical, it's like someone about to have a nervous breakdown. It's in its terminal stage. It's in what we call, technically, a blow-off. Here's another one, a chart that indicates this. Mutual fund assets as a percentage of total stock market capitalization. Basically, they're running in parallel. Remember, it's flow of funds. Flow of funds into a market is like blood in a body. The greater the blood flow, the healthier the body, the greater the flow of funds into a market, the healthier the market. But that is ultimately dependent upon the psychology of the investors, because the future is always a subjective perception of reality. None of us know. We're always subjectively perceiving what the future will bring. And so, when things are unstable, it tends to be like a tide that lifts all boats. Instability in the earth change area, in the psychological area, inevitably leads to instability in the social order and the financial arena. Switch fund cash, or cash held by mutual funds, recently again hit a new all-time low. So they're least prepared for a sell-off now than ever before. They're holding, mutual funds are holding less money market funds and fixed income and holding more stocks. And look at this growth on a year-to-year basis of investment clubs. In the last 4 years, and particularly the last year, the number of investment clubs has soared. If everyone always did the right thing at the right time, investing-wise, everyone would be rich. Right? So what are the odds that everyone is doing the right thing at the right time? In truth, the odds are 80% between mid-November and mid-February that we'll have a stock market top, based upon historical analysis. And you know about the old 80-20 rule. 20% of the people give you 80% of your business, 20% of your people cause 80% of your problems. You optimize at 80%. You can't be perfect. You can shoot for excellent, but you have a lot of activities and many different options on how you want to spend your time, money, life, etc. You're best operating at 80-20 because that's the point of optimization. And by the way I view the spectrum of life, I define spirit as living energy with information, personality, purpose, and power. And the spectrum of life moves from energy, moves from spirit to energy to matter to life, equal time, equal money. So it's not either or, it's like different ends of the spectrum. And that rules out the conflict and keeps us from truncating our flow of consciousness when we recognize there's a continuous flow there from one end of the spectrum to the other. Okay, equity speculation index. House speculation, according to the bank credit analyst, all-time high. Extreme speculation, all-time high. Margin debt in stocks as a percentage of GDP, again, record highs. New York Stock Exchange margin debt, record highs. Now, a lot of people are getting very rich very fast, but you know what? It's less than 20% of the population. and in most cases, less than 10%. Because you have to be knowledgeable and quick to make money in these kind of markets, and not many people are, unless they've gotten in like on American Barrick and ridden it a long time, or some other stocks of that nature. Mergers and acquisitions, again, from 91 to the present, just blowing through the sky. Initial public stock offerings, record highs. Secondary stock offerings, record highs. And yet the yield, in terms of return, on U.S. stock dividend yield from 1871 to 1996 is now at an all-time low. Now, many of you are usually used to dealing with money and finance to the degree of sophistication that I'm just talking to you about it today. Most of you are here because you're dealing with things that have to do with parapsychology, paranormal things. You're interested in science, a lot of some of the soft arts, some of the artistic areas. But can you get the feel of the harmonic of what I'm saying here in the financial area as being consistent with the area in which you're dealing? Hello? Okay. It's like the left brain moves logically, you know, but the right brain moves intuitively. And when you see harmonics or parallels of the same principle that you know in the left brain following through at different areas of human endeavor or reality through the right brain, then you know you've got imbalance and you're in touch with a primary truth. And a primary truth is basically we're in store for a quantum shift that's already underway. And with the trough of the sunspot cycle and sunspots starting to move up, it's the day of the new dawn. Okay. This just shows Dow Jones Industrial Average dividend yield, record lows, T-bills, which is considered the safest place to put your money. 3-month, 6-month, 1-year Treasury bills. Safest, smallest U.S. Treasury debt is yielding twice as much as stocks are yielding. The Dow Jones Industrial Price to Dividend ratio is at all-time highs. You could actually go out and build from the ground up with equity 3, 4, 5 companies for what you could buy the stock of a present company for. That's going to come back to some reality sooner or later. Just some other stocks along this line, or some other stock indicators. The Dow Jones Industrial Price Operating Earnings Ratio, again, very expensive. Dow Jones Industrial Price Book Value Ratio, overvaluation, very expensive. Percent overvalued and undervalued, very overvalued. Now, ironically, you can make money the fastest in a market when it's in its terminal stages. But you also have to be the quickest and be willing to say, if it falls X amount, I'm out, 5, 10%. Because big money's made here. The blue chip verifier. What percentage of blue chip stocks, the stocks of the best companies in this country, are undervalued? Record lows. Record low number of stocks, blue chip company stocks are undervalued. And here's a parallel path of the Dow Jones Industrial Average and the Nikkei Dow, what happened in Tokyo, and you see the similarity in patterns. It's been said in this country that, well, basically with all the money flowing from baby boomers who are saving into IRAs that are flowing into stocks, we've got a perpetual flow of funds into the market. Why isn't that true in Japan, where Japan saves 2.5 times what Americans save, who are more readily willing to put it in their market, and their market is smaller than the U.S. market? There are shifts that take place in finance and economics and psychology that make a difference. What I'm saying is it is a time to be careful. And one of the things I'm watching are bank debits, because when the velocity of money slows down in the banking system and the turnover of money and loans decrease, that leads to an implosion. We've already got the situation with corporations where the one-time windfalls of higher earnings due to lower interest rates is out of the way, where inflation due to wages and higher oil prices is putting pressure on stock earnings, as well as the psychology of an extremely overvalued market that is subject to what is happening with the central banks of Asia. Okay. Here's what I mentioned earlier. Notice in the last 3 years how net foreign purchases of U.S. bonds and notes have absolutely soared. We don't owe it to ourselves. The debtor is always a slave to the lender. We owe it internationally. You know, the Japanese don't like us. They don't like us financially and economically. They made some terrible investments at the top of the market in real estate in Hawaii and the West Coast, and they've lost faith and they're humiliated by it. They now know they control our financial destiny. Foreign holdings of U.S. bonds, another indication of the same thing, is increasing significantly. And foreign purchases of U.S. securities has been going up. If this drops off more than it has, that'll be, and interest rates start to move higher, as they have started moving higher, with the bond market moving lower in the last few weeks. That's a sign to watch, to be careful. To be careful. Let's see, what else do I have here I want to show you? How are we doing time-wise? Okay. In terms of net external assets, in other words, how rich is the country? The United States is on a downhill decline in terms of its net external assets, which means we're a big debtor, while Japan and France and Germany are on the up, or Japan's on the up, Germany's come off. But it just shows how poorly the United States is doing internationally in terms of the exchange of goods and services. And our real imports of goods and services have been increasing significantly, more so than that of Japan and Europe, and our export growth has been declining. So the picture I'm painting is that we're in a financial bubble. Most people don't know they're in a bubble when they're inside of it. It's only when somebody pricks it from the outside they say, oh, I was in a bubble. So I would urge you to exercise some caution. Here's another good chart. U.S. holdings of foreign debt as a percentage of total credit market debt. Remember I showed you the chart a few seconds ago, how much foreign debt is held by foreign investors, particularly over the last 3 to 4 years? Well, contrarily, what's happened is the U.S. holding of foreign debt as a percentage of total credit market debt has absolutely nosedived beginning around, guess when? The 1990s. So there's a correlation here between being a tremendous shift in terms of assets, creditors, holdings of gold to the Far East, the Western Asian Pacific Basin, as opposed to what exists in this country. And how have we maintained a lifestyle? We've maintained a lifestyle through increasing debt and also through a soaring stock market that has become extremely overvalued by all historical measures. Now, can it continue? Sure, it could continue. The odds are, and you play the probabilities here, that we'll see a shift in the first half of this year, probably in the first quarter of this year, maybe between now and mid-February. Does that mean you bail out of everything if you've got winning positions or investments in the market? Not necessarily, but it does mean you watch it closely, and if the market's going up, you say, okay, it's this high, I'm going to subtract 10% from the high, and at that point, I'm going to get out. Money management, money management. One of the best investments since 1960 has been farmland. Is that in keeping with us moving back toward grounded investments, what I call protein, gold, food, energy? Sure. This is a comparative investment returns over 20 years. It shows that stocks have performed best, but actually if you'd played it safe in treasury bills, you would have done better than if you had been in either gold bullion or in real estate. How are we doing? Let me open it up for a second to see if I'm tracking with you. If you have some general or generic question with regard to what I'm covering here, let me see if I can repeat the question and make it of general interest to the audience. Yes, sir.
What do you see for the future of gold, sir?
Future of gold? Gold right now is at a critical point because you've got a situation where the major turning points and cycles are projecting a bottom in gold now. It's declined, it's psychologically and technically more than 90% oversold, when normally you see an acceleration down to a major bottom. You're in the turning points when that occurs. So you've got both time and price and psychology all calling for a bottom in gold now. Frankly, I'm seeing much better bullish divergence in favor of copper, palladium, and silver particularly. The market I'm watching most closely right now is silver. The March contract above 475, closing above 480, I would consider a buy. Now, I tell you what, if gold screams through 350 on the downside and accelerates down, I'm going to be concerned about deflation. Just like if the U.S. dollar index, basis the March contract, moves up through 90.92 and continues high, I'll be concerned about deflation. Yes, sir, here.
R.E., Let me say this, interrupt for a moment.
Yeah.
We have this live mic here, and I'd like to have people come to this mic so that the question can be really heard real quickly. So if you have a question, would you line up over here behind this mic and ask RE those questions, please? Here's one.
Yes, sir. Go.
If you get out of things, what do you get into? Do you get into treasury bonds? Do you get into
If you get out of
cash? Do you get into, where do you go?
basically, the most contrary opinion says the most out of the favor investment right now is cash. But I know the most wily and smart men I know, and I've got one investing client that's worth $4.5 billion, and he's moving where he owns things free and clear, or moving into cash, and that may be a combination of U.S. dollars or New Zealand dollars, or Malaysian ringgit, or Singapore dollars, or Irish punts, or British pound, along with U.S. dollars, while the U.S. dollar is moving up. But that's basically, and then there may be an opportunity here in the gold stocks and also the metals, as well as in energy and energy stocks, agricultural stocks as well. But those are things identified literally on a twice-a-month basis in my newsletter. Yes, sir.
Instead of getting out of the market, what's the matter with going the reverse, either short or buying puts instead of calls on index options?
Okay, that's a good question. Normally, that's a very sophisticated question. There's nothing wrong with that. One of the best to look to short it is a Ridex Ursa fund, or to buy puts in the futures markets, or sell calls in the futures markets. Those are certainly ways to short the stock market, or the OEX put options.
Well, the index options are a little bit less volatile, although they're not totally volatile. They're a lot less volatile than the futures.
In fact, my clients in the long-term investors portfolio have between 5 and 10% where they're starting to scale in and test the water, toe in the water type thing on the short side now. Good question. Thank you.
What are your possibilities in the platinum market for the future?
Platinum presently is priced basically the equivalent of gold. historically, when gold and platinum are about the same price, usually platinum's a screaming buy. Now, the way I would approach that tactically is palladium's already formed a nice big saucer bottom and moved up. Copper has moved up. That may be a function of industrial demand commensurate with the stock market. So I would wait to see silver move up, and then when I got a confirming buy signal in gold, that's what I'd probably buy platinum and watch the spread on it.
So would you still at this point recommend buying silver rounds?
Buying?
Silver rounds.
Well, I'm not going to. Once again, I think all forms of silver I will buy when I get a technical buy signal in the markets. And what I'm watching right now is for the March contract, the silver, which you can watch in any newspaper, closes above 480. I will have a technical buy signal. Intermediate basis, I think, will probably be a major buy signal. Then you can buy it in any form you want. Call options. I have told my clients, as those that are more speculative, if you wanted to buy the December 1997 contracts of gold, silver, on a scale-down basis now, you could buy a few of those options because they're cheap. Also buying the December corn, soybeans, November soybeans, and December wheat contracts when they were cheap. And this last report, they've already bounced up significantly, so I would wait for a pullback. Yes, sir.
Would you comment on the remarks that the head of the Federal Reserve, Greenspan, made about a month ago? Yes.
Alan Greenspan, I did a two-part interview with Martha Sager, who was a Federal Reserve Board governor, who resigned, and the press. I know you believe everything that Dan Rather says and everything that appears in the New York Times and everything that's in USA Today. But somehow or another, they just overlooked Martha Sager's comments when she resigned as head of the Fed, as a member of the Federal Reserve Board. And she talked about how the Fed works with the Treasury, and particularly the New York branch of the Fed, in their manipulation and intervention in the currency and interest rate markets 24 hours a day. Greenspan is looking for his place in history right now. And he's sending up these trial balloons, so if he has to, go back and say, you remember in December, I warned you that this was a bubble. I tried to tell you. So he's established the ground that gives him some sense of protection and CYA. None of you know what that means, I'm sure, but. Okay, to protect himself, protect his backside in case this thing happens. But I don't take a remark by the chairman of the Federal Reserve like that lightly. They're very, very careful on what they do and what they say publicly. I consider that a warning flag. Yes, ma'am.
If you have a fairly conservative portfolio, some in stocks, some in bonds,
Diversified, yes.
diversified, and you're told that you really do well in a long run for a long-term gain if you just hold on to your blue chip stocks.
You know,
Because you have to put your money somewhere. If it's going to go down.
Right. My perspective for after 25 years in this business, it is basically anytime you have the type of windfall profits you have now, you start baby steps, taking some off the table, taking down some profits, and moving up, tightening up how far the market has to fall before you're willing to take those profits.
And then when it falls, do you look upon that as a buying opportunity?
Depends on that. Depends
You
on
have some cash.
when a market falls. It depends on if you're a short-term speculator and trader versus an investor.
Investor.
That's very difficult to pick tops and bottoms. This market has not had a 10% correction in 6 years. That is historically without precedent. I suspect when we have an 8-10% correction, it'll probably end up being a 28 to 33% correction because people aren't prepared for it and they don't know the psychology of fear in a down market. Markets go down 3 times faster than they go up because fear is 3 times more powerful than greed.
True. Thank you.
Oh, you like that? Okay.
The intelligence feelers we're getting out of the Middle East now points to the possibility of another war with Syria and Israel upon the horizon, and also a very, very serious condition of maybe a civil war breaking out in Israel itself.
Precisely.
What do you see if there Israel is invaded again, along with another that's shutting off the oil in the Middle East, the flow of oil ceases to come out like the Straits of Hormuz. What would be the overall effect?
Okay. I would expect there's a high probability of some type of turmoil in the Middle East this year. Not only, as you mentioned, the possibility of civil war within Israel, but also with all the biological and chemical agents, that type and high-tech terrorism by the radical Arabs inside Israel itself. Maybe that being more a way of subterfuge as opposed to direct attack. But in any case, I think that type of problem in the Middle East because of the oil card, and by the way, we don't have the ability to fight another Persian Gulf War. We can't do that again. Our troops are spread too far around the world. Also, with the Gulf War disease being what it is, we can no longer expose our troops like we did last time. Public consensus would not allow for it. And even the generals will tell you tactically and strategically, we can't do again what we did then. That was a one-time shot. And we're now just seeing what a high price we paid for it. So I would expect in that kind of situation, we would see a significant contraction in the stock market, much higher energy prices, energy stocks would do well, defense stocks would do well. Probably the U.S. dollar on a short-term basis would also be buttressed by that type of a situation. And that's not a scenario I would discount at all this year. I think another key nation to watch is Turkey because of its strategic location. Yes, sir.
What mutual fund would you recommend as far as options and futures are concerned?
What mutual fund?
That specializes in options and
futures and things like that?
Right.
Okay, there's a firm out of Chicago that I've worked with, Fox Investments. They got a lot of experience, and they have an 800 number. And you can contact Nell Sloan at Fox Investments. 1-800 information will get you their number in Chicago.
Okay.
By the way, you know, it's important to recognize that life is risk. And one of the things I looked at in terms of how I wanted to live my own life, I found that people who are facing death or are older don't regret so much what they did. They regret what they didn't do and risks that they didn't take. So if you're living in a risky environment now, and it's going to get riskier, you might as well say, you know, I need some diversification, there's a base of security, but life, really living it, is being conscious, living in the present, living in the now where there's only joy and pain, and also be willing to take reasonable, calculated risk. We're not talking about gambling, we're talking about risk. Yes?
Yeah, I'm an art student right now, and I'm wondering if you can recommend investment strategies for like little money, like $100 a month or something.
You know, there are mutual funds that, and one thing about these family of funds that you can move in and out of various indices with an 800 number phone call. Benham's a good example. The American Century is another. United Services in San Antonio would be a third, where basically with little money you have an account, you can move quickly into gold stocks or natural resource stocks or into bond funds or to cash or into commercial paper or to T-bill funds, and you can move it quickly. I mean, there are a lot of people that like Fidelity. Fidelity to me, while I'm not going to be critical, I don't ride elephants that are walking on green ice in spring. So I would suggest you use a fund that has the capability of moving you quickly across that whole spectrum of investments with an 800 call that's toll-free. You know, if you make things too complicated, you won't do it. So the old KISS, keep it simple, stupid, is really, and I find I'm the same way. I get tied up with, like all of you do, with all the things, the trials and tribulations and challenges of life. And so you've got to have something you can do that's quick and easy.
Will you have a workshop here, or is this your only time that you're here?
Yeah, I'm not having a workshop. I'll be back at the table back here for the books, the Earthman, and the newsletter, but I am not having a workshop, no, sir. How are we doing time-wise? Yeah, 8 minutes. Well, I got 8 minutes left. Come on, some more questions. Be brave. I'll repeat them from up here. Go ahead.
I'm very interested in water stocks.
Water stocks. Water stocks. Excellent. I think the major problem in the Middle East long-term is, in addition to religion, is water. I think clearly one of the key issues in this country long-term is going to be water. So I do like water stocks. Once again, one of the things I'm watching, that's a good question, because when markets sell off, I would like to see a 10 to 20% correction in stocks generally. You know why? Because they sell off at different rates and different speeds. And those that sell off the slowest and sell off the least and bottom the first are the strongest stocks and the strongest sectors, which has the greatest relative strength. And a good sell-off tells you, this is where I want to be. Right now you don't know where to be because it's gone up, 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 and away, you know. It's that proverbial balloon. But on a sell-off, and this is something I'll monitor on a sell-off, is the water stocks. If they sell off reluctantly, if they bottom early, and they don't sell off, let's say, less than a third or so, well, I'll be piling in there because I know there's greater relative strength, and I would expect that to be true in oil stocks and in food stocks and natural resource stocks as well as water stocks. Good question. Yes, sir.
You mentioned the value of reducing debt. Now, concerning, say, a house mortgage, what would you recommend that if one has a fair amount left on the mortgage, that one tries to reduce that as quickly as possible or put money into other investments? Okay. With regard to home mortgages, you need to think like a lender. The best thing to be is totally in debt, where they got totally mortgaged up, where they got no incentive of taking it back, or totally debt-free or be able to get debt-free. Because normally, the way foreclosures are looked at, and this has been a problem in Switzerland as well as Japan, is that where there's equity, that's where they have value, that's where they tend to go. So that's a question that's a tough one to answer. It depends on how much equity you have. Most people, the mortgage rates are still above their ability to what they can earn in the markets, and if the amount you're paying on debt is greater than what you're earning in terms of your investments, it's better to pay off the debt, because that's where the relative real return is. What about if one has credit cards with fairly low interest? Is it better to pay those off, or
my practice has always been to pay off credit card debt every month. I just use it as a way of keeping track of accounting for tax purposes. And the perspective on consumer debt is that's an area that definitely can be cut back, and I would recommend highly that be the case. Yes, ma'am.
What about offshore investments?
What about offshore investments? If the U.S. stock market sneezes, the offshore mutual funds and stocks will catch a cold, because those are primarily pumped up by American money. And you can make money fast out there, but it's more of a riverboat gambler's market like the gold stocks are. I like offshore investments in the developing world, and like real estate, Indonesia. Malaysia, I think, is the country that could have a future, and I've specialized in the foreign currencies now for over a decade, and now Americans can finally do that as a way of diversifying and earning interest as well as appreciation. I mean, how many people could have a CD that made 22% on their money last year, but that's what we did in the New Zealand dollar with no risk. New Zealand dollar. Now, I don't think that's the play now. The latest play's been, I think it's in the Norway krone and probably the Malaysian ringgit. Yes, ma'am. Good to see some ladies answer some questions here. They're running the pocketbooks anyway. Go ahead.
What about investment clubs?
Investment clubs. I think most investment clubs are an excellent way of becoming financially sophisticated, learning about what's happening in the markets. My only caution would be is that they tend to be gung-ho totally into stocks, and you've seen this huge growth in them, and those are primarily in the stock mutual funds, and that's where I would be cautious. But as a place of having wonderful fellowship, sharing ideas, learning, becoming financially sophisticated across a whole spectrum, they are wonderful. Yes, sir.
Can you give us a discussion about junk coin silver as far as this?
Junk coin silver. My thinking on junk coin silver is that if you like that aspect of silver, when the March contract of silver futures closes above 480, you can buy some. And I think silver should hold around 450. That's my target. 448 to 452, actually.
What about its survival uses?
Well, you know, survival uses, survival gold and silver coins are like survival food or like insurance you have on your car, fire insurance, theft insurance. That's a personal balance that you each have to maintain on your own.
Do you know of any investment groups who are investing in free energy technologies?
Do I know of any investment groups that are investing in free energy technology? No. Talk to the Tesla people, Colorado Springs. That's really their area.
Are we going into inflationary or inflationary period?
That's a good question, because the question is if we're moving into inflationary or deflationary period. Clearly the world is moving into contraction deflationary. Japan and Europe, as I mentioned earlier. The U.S., runs the risk of having the worst of both worlds if our current account deficit and our money flows reverse, where we have high interest rates, a weakening dollar, and a contracting economy. And so you could have higher inflation, a depreciating currency, and a contracting economy. Right now, over the short term, the pressures are for a slight inflation, but nothing near like we saw in the 1970s. Yes, ma'am.
This is the third time this week that I've heard the message of be careful, especially with mutual funds, from different places. Usually when I hear things from 3 different places, I really wake up. But I'm not the only one waking up. So now what I'm worried about is if everybody starts selling off, isn't that going to hasten?
It's like the first person that smells smoke leaves the table and quietly walks to the door. It's like you want to be in the top 20%. You want to be the bottom 80%. The 80-20 rule's back to us, okay? There's a question. I saw a hand back over here. All right, go. All right.
Okay, with the mutual funds you were referring to before, that with a phone call you can shift small amounts of money from one place to another, could you elaborate on which ones they were, since Fidelity is not on your top of the list there, and also what basically would be the transfer funds? Are we going to get killed on the transfer every time we do that?
No, there's some where there's no fee at all.
All right, could you elaborate on which ones?
In these funds you can get information on 800 services, like United Services out of San Antonio, used to be Benham Capital Resources Fund, Benham, B-E-N-H-A-M. They're now American Century. They have 800 numbers. Those are 2 that I follow regularly in the Reaper. Also Ridex. Ridex has a family of funds. And these aren't the ones that you see advertised on TV and in Investors Business Daily and the Wall Street Journal all the time, but I think they do a pretty good job.
Ridex, R-I-D-E-X?
R-Y-D-E-X, Ridex, R-Y-D-E-X. And they'll offer you a whole family of funds.
Thank you.
Good question. Yes, sir?
Do you think the Swiss will reduce their gold reserve requirement?
Well, clearly the central question is, you heard the question. The Swiss and the central banks of Europe have been reducing their reserve requirements. In fact, there's been central bank selling of gold and forward lending by producers that has pushed the price of gold down, and the reason they're doing it is because they need to sell the gold to basically handle their budget deficits. Question is, now that that's old news and in the marketplace, you don't make money, by the way, when everyone knows what's going on. You make money when you're one of the few that know what's going on in the top 20%. Because that's where there's risk, okay? So I would expect most of that news about central bank selling of gold is pretty much in the market, unless we're just going to see the thing just free fall from here.
My understanding is that the production cost of gold is about $280 an ounce. Do you consider this to be a long-term factor to
Yeah, production cost of $288 an ounce could very well sustain a gold price. That'd sustain it at $330 to $350 though. and other factors would then send it higher. I think there's been also, I know there's been a lot of Middle East selling of bullion as well, as they've moved more into paper assets. You would expect the whole world, in conclusion here, to be loaded up with paper assets, which with a match can go, or a computer blip can go up into smoke or cyberspace. At a time, that's where the mass is, at a time when the clear emerging trend in every area, health, emotions, investments, is to move back toward the grounded into the spectrum. A word to the wise is sufficient. Thank you.